Hey, it's Clay at ClayTrader.com. This will be the weekly review of the Power Profit Scan newsletter, which is a portion of the Inner Circle subscription that I offer. And a couple quick disclaimers that I want to go through before getting started. First off, am I trying to imply that every single alert that I send out or that's part of this membership is a huge money-making success? No, unfortunately, I can't make that claim. In fact, if you watch past videos in this series, you've seen me show plenty of losers and things that don't quite work out. And a little spoiler alert, you may be seeing some of that here in this one. The point here being, though, that this is why risk management, risk control is so important, because losing trades happen, being wrong happens. There's no such thing as a perfect trader, perfect system. So that's why you want to make sure you have risk controlled, because while losses do happen, that's a two-sided coin. Winners also happen. So when those winning trades do occur, you want to make sure that you know how to keep your account and have your account in the best possible spot to let those overall winners keep everything in a kind of a big picture uptrend. The second alert, the second disclosure to talk about here is we are going to go back and look at, like I said, the weekly newsletter, and for the week of July 8th. Clay, why are you going so far back in time? That's a very fair question. Two reasons. First off, it's just simply giving the chart plenty of time to play out so that we can see what has actually happened. Second, it's a matter of being fair. This is a paid subscription, so the last thing I would want is for somebody to pay to join and then all of a sudden see the information that they've paid to get out there for free on the internet. I'm sure you can see how those people would probably feel a little bit ripped off if that were the case. So that is why we're going back, several weeks into time. So with that being said, let's get into it. A few quick questions that I get all the time. Hey, Clay, what price range do you go over? I cover all sorts of prices, and you're going to see that here. Prices, yeah, it's important, but it's very low down my priority list. I want to see some things, setups with high probabilities of success, with good chances of success. That's my top criteria, is just putting members and alerting members to situations that I believe have a higher probability. So I don't want to just force myself into a corner by only being able to focus on a certain price range. I care about probabilities way more than price. Second question, Clay, when do you send this newsletter out? This is always sent out over the weekend. That way you have plenty of time to think things through. So it's not like you all of a sudden get a random text message in the middle of the day and you have to run in the bathroom to take care of it. No, this is sent out over the weekend. That way you have plenty of time to look things over and think things through. So first alert we're going to talk about here was OTLK, and the category I made for it was just under the radar, because as I noted down here, volume wasn't huge. Volume wasn't really doing much, yet the price was kind of creeping its way upwards. So one of those things where it's it's at least keeping an eye on, because it's got a history. It's made moves in the past, but will something come back? Will the volume return? So that was the whole idea. So let's see how this played out. So again, this was the alert when it was sent out over the weekend. So the next candle you'll see will be from that Monday. So you can see it drifts, comes down to that trend line. So potentially an entry point there. Or maybe, just still at least worth keeping on your radar, because, hey, it's sitting at that. So either an entry point or just keep it on your radar. But then that happens. And then that happens more. And, that being, not only has it broken through the trend line now, but it's, broken down through that blue line there, which on my chart is denoting the 50-day moving average. So either kind of from both vantage points, if you had bought up here, then a disciplined trader is saying, you know what, it's time to hit the road. It's breaking down here. Or if you're just looking at it and saying, well, at this point it's breaking down, it's time to take it off the watch list. And both those are more than accurate, keeping either a small disciplined loss or just removing it from the watch list, and then see what happens. Right like that, massive move to the upside. And that's just how the market is. It makes me laugh in a sick and twisted type of way, because, that's the nature of the market sometimes. Literally, we'll do something goofy like that, and then all of a sudden just explode. And it doesn't make you a bad trader if you took the discipline loss. It doesn't make you a bad trader for you to have taken it off the watch list pretty much a couple days right before the big move happened. That just, it happens. And that's just part of the market. And that's why I like to show these examples, not from a marketing perspective, because I don't like sitting here and saying, this alert didn't quite, but from a very real life perspective, it happens. Doesn't make you a bad trader if it happens to you. It makes you a disciplined trader. So this is kind of when, being disciplined is a buzzkill. Here's one of these examples, but it is what it is. The next stock to focus on here is ticker EA, and just, kind of question, is history going to repeat itself? Real quick from a price. So keep in mind, we were just looking at a $2 stock. Now we're looking at a stock up, in the 90s. And the whole idea was, hey, there's a big track record of it bouncing from this area. So can it get down there and bounce again? So let's see how this one played out. So here's a chart going into the week. So let's see how it played out. Pulled back a little bit more, and you can see right there, just absolutely beautiful. Came down there, bounced right off that support, gave us a nice hammer candle, and then began to bounce and bounce and bounce, and then totally rolled back over. Now, there's several great learning lessons from this that I like. First off, don't look at it like, wait, that's it? That's only 4.7%, which leads in the first. Remember, there's something out there, if you're not familiar, called options, and options are a great way to take advantage of these higher price stocks. And, I'm not talking in theory here. The reason this one always stuck out is because, a member was coming in saying, hey, great alert, Clay, got some EA, call options, they're called. And sure, the stock itself only went up 4.7%. And I'm not going to turn this into an options, lesson, because that's a much deeper rabbit hole. But the point being is there are ways to get involved with these higher price stocks and be able to capture more than just 4.7%. Now, in all actuality, 4.7% in a time span of less than a week, that's actually really good. I mean, I'd encourage you to go to your local bank and see what the bank CDs are. And I think if you're lucky right now, you can get like 2.8% for an entire year. So 2.8% versus 1 year, or 4.7% within 2 days. I'm going to go with the 4.7. And then the other thing is, again, that's just kind of how the market works. Don't get me wrong, this was definitely a winning trade, but kind of a disappointment in the sense of it was looking great, bouncing, and then back down it went. Again, it happens. Not every winning trade can be a massive winning trade. Sometimes they're just, things were looking so good, things were looking great, and then that fast they can turn around. And that's just how the market is. Welcome to the life of being a trader. So yeah, a good trade, a solid little trade here, especially if you're using options, but also just, keeping it real. Kind of disappointing that there wasn't much of a follow through at all and it rolled right back over. The next alert here, ticker PES, and we were, just threw it into the technical pattern being a falling wedge, which sounds like that would be a bearish pattern, but it's actually a bullish pattern, whereas the rising wedge is actually the bearish pattern. But anyways, so I mapped out the pattern here, so let's see how this one played out. So there is the falling wedge pattern, so let's see how this played out. You can see right up there, did some battle with the trend line, so potential people getting in right around here, and then did indeed get the breakout right there, and kept on breaking out. And distance-wise, I realize that doesn't seem like much, but when you're talking about a penny stock, percentage-wise, that was a solid 28% move, and again, less than a week. So let's say you screwed up half the trade and you got 14% from it. Again, is that like a massive percentage? Actually, yeah, it kind of is when you, again, go to your local bank and look at the CD rates and see, well, I can get 2.8% for 1 year, or I can get 14% for less than 1 week. When you look at it like that, that's actually a really big percentage. But again, the overall idea here is, yeah, this was totally a winning trade. There's no doubt about it. But it just didn't get any follow through, kind of frustrating in that regard. That got the breakout. It definitely moved. It moved a good chunk. I mean, 28%. But then just totally rolled right back over and didn't get that much continuation. So yes, it was a breakout. Yes, it was a profitable trade. But still, kind of like the previous one with EA, it just disappointing in the sense it didn't get much follow through. But again, it is what it is. That's just sometimes how the market is. And then I want to look at a couple other parts of the newsletter. This part is for people that have invested into my training program, and I bring that up because there are no images for this part of it. Just because, well, when you're armed with knowledge, you know what to do with the ticker symbol. So it's kind of, I always use the analogy. I'm just pretty much pointing out, hey, it looks like there's some fish over there potentially, and that's all I have to say because you've invested into learning how to fish and you understand it, you can just go over there and capture the fish all on your own. So that's why this section is just simply, ticker symbol. So the first one I point out here is INCY, and this is, in our shorting category. Shorting, all that means if you're new is you can make money when prices go down. Yes, I realize that sounds goofy the first time you hear it, but yeah, it is possible within the market and trading to make money when prices go down. So that is what shorting is. So let's take a look at INCY. So that's what the chart looked like when I sent it out. But again, as a reminder, we want to see prices going down. In this situation, that's a good thing. So right there, as counterintuitive as it is, that's actually a really good day to see the price going down. And I'll kind of keep things moving, but even down further, that's good. and then down even further and down even further. And that move right there was good for 8.6%. Again, don't necessarily look at the percentage because there is options that you could have been involved in that would have given a much bigger percentage than 8.6. But even when you think about it, going back to the 2.8% for 1 year or 8.6% for just a couple of weeks, I mean, that's still a nice little trade there. But the best part and what I know a lot of people find fascinating is that it's weird to think that, yeah, this price actually went down, but yet you were still able to make money. Yeah, absolutely, the power of shorting. And then the final one we're going to look at here is VSI, and this is from our trampoline setups. Again, no images here, but that's just because people that have gone through that class, they know everything to look for, and I'm just helping out by kind of pointing out, hey, there might be some fish over there. So let's see how VSI turned out. And if you're curious, that one was a small loss. I think that was a no play, and that was also a no play, meaning there was just never any buy signals for that one. But let's take a look, like I said, at VSI. So again, there's what the setup and chart look like. So I'm going to kind of go through this one quickly, but you can start to see shows some signs of power there. Very, very nice. Pulls back a little bit, but nothing crazy. Back up it goes, pulls back a little bit, nothing crazy. Pulls back, just kind of consolidating. And then just like that, price opened up all the way there. So it's hard to see, but price closed there. And then all of a sudden the next day opened all the way up there. Absolutely a beautiful move for 73.3%. Might go a little bit higher. As of the recording of it right now, though, 73.3%. Again, let's just say you screwed up half the trade and you made 35%. 35% for just a few weeks. You're definitely not going to get that at your local bank. So a great way, and really kind of just illustrates, it just takes one. So yeah, we had a bunch of those, just frustrating situations where either small losses or you never got any to really follow through. So, it's kind of just not bad, but it's not great. But something like this, all it takes is one, and that can really turn the tide in your favor. And like I said, even if you screwed up half the trade and got 35%, but I mean, even if you played it decent and got 60%, think about that, 60%, that's going to wipe away a lot of frustration and, not a lot of discipline losses. So yeah, just takes one, and here VSI was kind of the knight in shining armor. If you are interested in getting alerts like this, then you can go to claytrader.com/team. The other thing to note is, yes, these newsletters that you just saw here is part of the subscription, but there's also a live trading chat room. So that is where you're going to get, real-time alerts and commentary and all sorts of stuff. I'm very active in there. So it's a great, networking tool too. The other thing to keep in mind is there's a app that comes with it. So by no means you need to change your computer or anything like that all day long. You can keep in touch with everything going on from wherever you're at. And as far as, the cost here, $99 for 3 months. The number with that and the way you should think through that is, okay, in order for me to break even on the $99 for 3 months, do I believe the service can make me more than $8.25? Not per day, but per week. If you think the service can help you make more than $8.25 per week, then you will get a return on investment. That will be a good investment to make. Now, if you don't think it'll help you make more than $8.25 per week, then don't join. But if you think it can, which I'm pretty confident, I'm not exactly setting the bar high, $8.25 per week, then that is the package that you would want. Now, if you go for the entire year and get 3 months free for $297, that $8.25 number goes even lower. But I'm just taking $8.25 at $99. So that's really kind of the way to think through it from an investment standpoint is, do I think it can help me make more than $8.25 per week? So it can. I'm very confident in that. And so go there, sign up, join. If you have any questions, leave those down in the comment section below. But if not, I'll see you on the inside.